Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Tuesday, October 16th, 2018. This one's only going to be on the broad markets, although I'm going to keep it for members only, subscribers to the site, as I want to cover some price targets on QQQ and some potential scenarios I posted in the trading room today, and then again on the front page, I reposted that I'm considering QQQ as an official short trade idea here soon. Just need to see a little bit more evidence, and I'm going to show you what I'm looking at. One way or another, I think we're at a very important technical juncture in the market, and we're either going to mount a considerable bounce here, because again, as everything I've highlighted recently, the indexes are still right on or very near, close enough in proximity to very important long-term trend lines and moving averages that you can't write it off yet. Although the technicals indicate to me those levels are going to break, and it's more of a matter of, do they break this time around? Is this just a temporary pause here that we fell to those levels and held them at the end of last week? Do we hold for maybe today, tomorrow, into this week, and then continue down? I think if we do, it'll be a quick slide. I don't think we're going to sit here very long. I think we'll either move off these levels or continue lower. And I say that just looking at past periods where we traded on there. Sometimes here's an area in the SPY where you had a couple weeks, second test that level. But for the most part, usually after these sharp corrections, you can just look at all these candles. When the sharp corrections are over, you usually reverse pretty hard. Just, and again, pull weekly candles or daily candles. And so after that, it's usually once in a while you get a second retest, but normally it's a quick snap back up once those levels have been held, the support levels. And they're not all listed on this chart. Many of these corrections came back to support levels on the daily time frame or 60-minute charts, and they were, corrections in an ongoing bull market. But in recent years, we've come back and tested this bull market uptrend line. So let me just get into the charts here. I'll tell you what I see and give you some targets to let you guys decide what to do. This is our bull market uptrend line. It cuts off. Unfortunately, this charting software only goes back, I think it's 200 bars, so there it is. I have to go to a 6-day period. See, that comes off the March 2009 lows, and it really has captured the bigger trend of this entire bull market on the S&P 500 or SPY here. And when we zoom in, and there's some flexibility, you can move it up, down a little bit, but for the most part, I have it either right on if I move it down and touch the bottom of these candles here. But the best fit that I have comes in here. I capture more bodies and or candlestick shadows when I do that trend line. So that has us just below trend, but yet right on top, as I mentioned, still above that 40-week moving average on SPY. Normally, when you come down to that level, that has proved and may prove again to be a buying opportunity because the primary trend is still clearly bullish. My longest term trend indicators are not even close to flipping to bearish yet. Those are the ones that tell you you're in a bear market, but as most trend indicators are, they're not the longest term trend indicators. They use much slower moving averages. They're only going to tell you that when we're down probably 20%, close to 20% on the high, probably in a bear market at that point. I just want to let you know that that's how those trend indicators tend to work. But of course, it all depends on how the top develops. Some tops are very sharp, like in 2000, March of 2000, we went up, parabolic move, and that was it, and then we fell down. Other tops are more of a process than an event. So there's a SPY, and I just want to make clear, if we get going here, here's a period of consolidation here, and on the daily chart I'm going to get to in a minute, it looks like a much larger bear flag. This is a weekly chart right now, but if this level goes, I think we see a swift move down, and we're going to test, again, those lows back from earlier in the year, 2370, give or take. That's not a hard number on SPY, roughly. That would be my target, and it's about 8% lower on SPY, and I'm looking at about 11% downside on QQQ if we fail here. And again, it'll probably be sometime this week, no later than early next week, I think, if we fail. But more importantly are the levels, and that's, I get a lot of questions put to me in the trading room about options. I traded options many times. I used to be a stockbroker. I'm very well versed in them. I don't like them. With options, not only do you have to get the call right on where something's going, you have to get the timing right, which brings in a whole additional degree of difficulty into something that can already be difficult to begin with. So again, and I know some of you use, well, option paired trades where you limit your risk and your downside and all that. But again, you have that time element no matter what, whenever you trade options. So there it is. So again, I think quickly if it happens, think this week. By next, it'll start to play out. Not that we'll get there, but if we could get there very fast, look how quick that first leg down was. All right, enough on that. Now we go to a daily chart, and let's see if I have a cleaner board here. Let's just go to one without hardly any annotations. So remember last week I mentioned this period of consolidation here which identified as a potential bear flag, and it was a little more impulsive selling on QQQ. I'm on SPY right now, and it did play out as such. Now keep in mind, now take that away, and now let's look at the bigger picture. Since then, we had very impulsive selling, especially in the SPY. That's what really changed this time around. This started out as a tech wreck, a lot of pressure. The FAANG stocks were under, but then the SPY started to play a game of catch up to the downside. And what I'm looking at now appears to be a much larger potential bear flag pattern. So if that does play out, that would take us down to those targets that I'm looking at here on SPY. I just showed you a second ago, and QQQ, which I'll get to in a minute ago. So this is what I'm watching. And part of the whole scenario I'm laying out, it'll have to play out soon. Bear flags can't extend forever. They need to keep some form of symmetry. Basically, you have a consolidation area on decreased volume. You have the high volume move down, which is called the flagpole, leading up to the formation of the flag. And then you get that upward sloping pattern there. The other day I mentioned as a potential pennant, but they're the same. A bear flag and a bear pennant have the exact same implications. A pennant's just shaped like that, where the flag goes up like this. So now the pennant's gone because we had a little pop higher today. And this may or may not prove to be a flag. When you'll know, when you'll have a very good idea, is if we break to the downside of that flag, and that breakout is impulsive, you start to see selling really start to kick in, high volume, and especially if we undercut those recent lows. If we continue to go through there impulsively, that's when you'll have nothing's 100% in trading, but that's about as good as you get for a sell signal and an indication that the market's going to take another sharp leg down and probably fall another 8% or so in the SPY. Again, my target, just pouring over the charts last night, and about 11% in QQQ if it happens. And if it doesn't happen, this is very important. A lot of people are asking. Everybody wants to short here. I didn't have a lot of questions back here where to short, what to do on SPY, QQQ when those levels broke, but everybody wants to short right now after the market's already dropped 10%. You got to be careful. Like I said, we just came off the most overbought levels in many, many years. Oversold. We haven't been this oversold in years. Deep oversold readings. And trading, when you get to the markets or any stock, it's just like a rubber band. Go pick up a rubber band now if you're at your desk, pull it, stretch it. The farther you stretch it and then you let go, the faster it snaps back. And that's what can happen here. We can have a pretty sharp snapback rally, especially if the buyers step in. If at this point in time, it's this simple. If there's more willing buyers than willing sellers in the market, then it's going to go higher. But if the buyers have been exhausted and they want to start taking profits, they're going to sell into the bounce. Sellers overwhelm, and you're going to see that move down. And then the technicals will come into play. The technicals work because if we reverse and take out these recent gains over the last few days since Friday, you're going to see a lot of stops get cleared. I know a lot of people have stepped in to buy Apple and Amazon and their beloved stocks that they either own or wanted to own and just were waiting for a buying op, pretty much all year since those first two dips, and they're going to be underwater if that happens. And if not, then everything's good. We bounce up again, and I already laid out a scenario. We have plenty of room to put another high in this market and still keep these weekly divergences intact. I'm sorry, this is a daily chart, but on the weekly chart that is. So, okay, I just wanted to lay that out, and then more importantly, here's SPY real quick. Let me get to that. So this flag is really, I'll tell you, as I'm doing the video here, it's stretching the upper limits. I showed it on the daily. It's really starting to stretch the upper limits of what it should look like, and I'm talking symmetry. There's the flagpole down, or you can take it from there. That's getting to be pretty big now. Still possible, but if we go up much higher like this, then just we'll eliminate that flag scenario. It just doesn't fit for, again, the symmetry relative to the size of the flagpole. But we do have a pretty solid level there. I mentioned this earlier today. I put up a chart and a post on the front page, which hopefully you saw by now. Boom, boom, boom. Lots of reactions on this level. I really like this level, 279.50. If the bulls can slice through it like it's not there, and not intraday. Remember, with this increased expanded volatility, the one thing I can tell you to expect is overshoots of support and resistance level, temporary breakouts that fail or breakdowns that fail, especially when you have a lot of momentum going to the upside. Today's move is pretty strong, but I would really be surprised with as much as we're up now if we just slice through 279.50 like it's not even there. So maybe a best case scenario, I'll give you my best case bullish scenario would be, let me see if I have it here. Okay, there's a little better. And it runs all the way up there. Here's about 278.88. So look for something like this. We're at resistance now. Again, you can see it there. Maybe a little consolidation and then a breakthrough. That would certainly help the bullish case. That would help work off the very near-term overbought conditions. But again, we're not anywhere close to overbought on the daily time frames. All right, let's look at QQQ and then we'll wrap it up here. QQQ, 60-minute chart. There it is. So if we look at the bigger picture, let me go. Yeah, we're on, I'm sorry, a 2-hour chart, 120-minute candles. So let's do this. So here we draw out, this is all messy. Let me give you a clean board here. Let's look at something without a lot of annotations. There it goes. All right. So what we're going to do is draw out that potential bear flag pattern right there. Looks something like this. And we'll consider now this the flagpole. And there's symmetry. The symmetry is okay there. This was that smaller flag that I pointed out that did play out, and even then some. We went a little beyond the measured target. But now that looks like a blip when you step back and look at the bigger picture, especially on a daily time frame. Remember, this is a 60 or a 120-minute chart, so you're going to see more candles here. But on a daily, it was just a temporary blip there. So that's what I'm looking at, and I already laid out the scenario yesterday in the video that if that happens, one of the things that I'd really like to see to get into some longs, and I do have a ton of long set. I have a ton of setups. The problem is I have so many, it's hard to get out there and do a video. I have to cull the list down and highlight my favorite. I'm going to break it down to, I'll probably do a video on the gold stocks today, gold and silver mining stocks. And then just, I already did one on Chinese stocks and ETFs. And then I'll do some long and short trades in miscellaneous various sectors. But what I wanted to get at here was if this plays out, and we get that drop of what I'm looking at, roughly 11% from where we're at right now on QQQ, it may or may not take out potential divergences, but we could get, and I'd really like to see, bullish divergence on the 60-minute chart. It probably, the 11% drop, if it comes swift, and again, we don't have to have a full 11%. It may fall shy of that. That's why I have multiple price targets, so we'll have to see how things go. But something like that could really take us down. Pull these indicators back down and give us a bullish divergence here on the 60-minute time frame. You'd have prices making a lower low down there and then reversing with the indicators making higher or equal lows. Again, one potential. I'm not going too much off the 60-minute chart. I'm just focusing right now on this daily chart, and I'm watching these levels. I have different boards here on QQQ, but this is the one that I shared today on the front page. These are the targets right here, T1, T2, T3. When you see the levels like that, you don't see the equal sign. That means I'm showing you the actual support levels. I will, if this becomes an official trade, adjust those. In other words, if I think the bounce is going to, or the correction will end here, which is where I think it will end if we get that swift move down 153.90. I don't set my buy to cover limit order at 153.90. Why? Because if all eyes are on that level, and trust me, they will be, a lot of eyes will be on that level at least, you're going to do one of two things. You're either going to reverse just shy of that level, or you're going to punch through it. Sometimes you can tag it, but why hold out for a little extra gains or every last penny when sometimes a lot of buyers are sitting there waiting, shorts waiting to cover like I would be, and they may sell early and then reverse just shy. So I just want to point that out. My target would probably be a little north of 154, and my expectation is that we'd probably undercut those lows slightly before reversing. But again, and who knows? My trading plan's adaptive. If I may change that target or trail a stop down, but That's it, guys. This is the 2015 trend line, comes off mid 2015. You can see right now we are back testing that trend line, at least the way it's drawn here. Again, you can play around with this trend line. You can play around with the weekly trend lines a little bit. There's a little bit of flexibility. This is QQQ. Um, and this shows, again, this shows the drops that came after all the divergent highs in the past. And I mentioned this before. They range from 10 to 26%, really a little less than that. I call it about 18 or 19 on the NDX. QQQ, as I mentioned, had a mini crash there because it's an ETF. The index itself didn't drop that much, but it did fall close to 20%, right around there. And so far, just what have we dropped off the highs? From the highs, and this is a rough estimate. I'd have to grab the candle and then all the trend lines will move. But we've only dropped 10%. Based on the scope of these divergences and everything else, I would expect more, but the problem is we're at that key support level, and this is it. And this is why I will not add QQQ as an active official trade. Those are the trades I have the highest degree of confidence in. It is, it is. I think shorting here works. I am short personally, but that doesn't mean you should be. I'm in and out of my trades like uh, sometimes 10 times a day, in and out of NQ or QQQ or whatever I'm trading. But I am holding out because we're at resistance. I've got a little room to add. There's plenty of room to kick back up here a little bit more in QQQ and still be stay under some pretty significant overhead resistance. But if that level breaks, I think it can happen pretty quick. And it may happen. If it's going to happen, the market likes to trap the most amount of longs in and deny entries to shorts. That's been my experience. So it may happen on a gap down. We just gap down below this range and kick off the fireworks. But again, I cannot overemphasize, and I'm not trying to be wishy-washy. This is key support levels, and we could certainly mount a multi-week bounce here. I mean, here, look, we hit that 40-week back here. We had a 1, 2, 3, counting the week it was hit, 1, 2, 3, 4, 5, 6 week bounce before the next 12% drop. So you can't rule that out now, and it would certainly fit in well. These divergences would not be taken out. You would just extend those, maybe go on and back test this trend line here, this wedge at a higher level. Lots of possibilities, and that's why you don't get married right now. If you break down, we start moving impulsive, and my confidence is higher. Again, it'll be an active trade, and like any trade, it's going to work out or not. And all you can do is, enter that trade at objective levels, which in my opinion right now, back to that bounce back to resistance there, about the 176 level, give or take. And that level I just mentioned on SPY, which was 279.50. Doesn't get any more objective than that. No, most people want to buy on a day like today. And then you have to convince yourself this is when you want to be shorting if that is your trading plan. If you think this market's going a lot higher and you're going to get that multi-week bounce that I just said is very possible, then great. If you're in already, you got in somewhere here, wherever you got in, just trail your stops up. Even if you got in early, protect your position, trail stops up, because again, this right now we should have no business. If we break down below this potential bear flag pattern and starts to become impulsive selling, high volume, again, things get pretty ugly, and you might get one of these where you don't have, if you're long, an objective time or level to get out. You're waiting for a bounce, and again, if that scenario, the bear scenario plays out, you're not going to have a decent bounce till the market's down about 10% from where we're at right now. That's again my it is my preferred scenario, and again, it's one, if we didn't have so many things right or at or near key support levels, it would be an active trade. But active or not, again, you guys make your own trades, and if you want to short or go long, that's up to you right now. We're going to wrap it up with just a quick overview of the big market leading FAANG stocks, because this plays in a lot to my analysis. So there it is. QQQ is on support. Stick save last week, parked it on support. Another green candle so far this week in formation. Not very big, but still a green candle. Apple is well up below all key support levels. This is my primary uptrend line, but we have this big divergent high. This is the largest divergence we've had in a long time. But Apple is above both that 40-week moving average and trend line. So from a weekly perspective, the stock is fine. It's not at risk right now. Daily chart, a little bit different story there. It's dancing on support right now. We broke below this trend line. I have this wedge right here. It's a rising wedge with the blue up trend line. And I put a secondary benefit of the Dow trend line here, and that just captures this one reaction here. Well, of course, the initial low right there, another reaction, and then these recent candles right here the last few days, and that's my BOD trend line. So if you're looking for a big level on Apple, you want a short Apple, or you want confirmation that the Qs might be going down. Apple being the largest component of QQQ and SPY, if it gives up 216.41 with conviction, it will also give up this trend line, and that's going to take us down to here to my target. And this is another thing. With this correction we've just had, the fact that Apple hasn't touched that key 200-day, 40-week moving average makes me think that it's going to want to do that. Otherwise, it's leaving some unfinished business behind, in my opinion. Apple doesn't report until the 31st. Oh, no, that's wrong. That's the last earnings. I thought I updated this today. Let me see. Okay, there it is, Thursday, November 1st. So we don't have to worry about Apple gapping up or blowing away earnings before, or really a miss for that matter. So it might be affected by what some of the other tech companies do, but there it is, Apple. We're clear. We have a green light for those of you that want to short Apple. You have a green light, at least as far as earnings go. Again, on a convincing break of that level. Earnings November 1st. And Apple, if that correction happens, and I know a lot of people own Apple and trade Apple, I already told you I'm looking for about 11% on the Qs, 8% on SPY. That would roughly, so we'll call that 10%. There's 9%. So this would be my target on Apple right there, about 197.20, about a 9% drop from where we're at right now, roughly. So Amazon. Amazon, and this also, all this plays into my analysis. That's why I'm doing the video. We're okay at least till the 25th of October for earnings. So if you're in a swing position, this was a beautiful setup, and I highlighted this wedge, and shame on me for not adding this as a trade, an official trade. The trend line got moved somehow, but there was a very, very well-defined trend line. This is just beautiful technical analysis. Divergent high right there, breakdown, back test of the trend line, and a failure. And here's the thing I'm trying to get at here. This was the high right here. Did equal or roughly equal high, call it roughly equal high to the previous high. Then the selling started. And most corrections, they don't end like this. You don't have a one wave down correction. They're usually at least an ABC. And so if we look at this, you have you have a bearish pennant type pattern here. It would make sense to have Amazon break down and come on down and hit the bottom, at least of my second target zone there, possibly down here to my third target. And, is it possible that's it, one and done? It didn't even touch the 40-week moving average. Now, keep in mind that 40-week moving average or 200-day moving average does a better job of defining support and resistance on some stocks than others. I'd have to look at Amazon's weekly chart, which I'll do right here. And it trades through it a little more so. It's not, Apple does a great job, QQQ, but you can see here, I guess really since this powerful trend started back in 2016, the old Trump pump and all that, look at that, lots of reactions. It defined, it acted as support on the pullbacks there. It dipped briefly below it here, but got back above it and then started finding support on it again. Found support once before it broke it there. So there it is. It came very close. And again, it's a 40-week moving average here, but it didn't quite touch it. And again, from my experience, this looks like this correction may have more downside to go, especially considering the scope of these divergences. These are the previous divergent highs. The previous two divergent highs have resulted in a drop of 32 and 14% on Amazon. This one so far is only, I told you I can't grab the darn candle. Let's try it this way. I can grab it up here. From the highs to lows is what I'm doing. That's the high, that candle there. 18%. So did it meet what it, yeah, it's certainly at the lower end of the range there. But based again on this, the scope of these divergences, how large, these were small divergences. These were trend line breaks that brought it back to the primary trend line. Both times we haven't come back to that primary trend line here. So there's my target. This is where if we take another leg down soon, or even if we don't, we bounce higher, this line I believe gets hit by the end of the year, and that's about you won't want to hear it if you're a bull. That's about 18.5% below current levels, and I think by year end, Amazon will see that level. All right, a couple more and we'll wrap it up. Microsoft, again, these some of the things giving me pause right now, and this is why I'm not fully short QQQ on its official trade on the site. You have a very, very well-defined uptrend line that Microsoft tested last week, bounced off of, and it's trading above it this week as well. And it's still above this 40-week moving average. These previous divergent highs resulted in corrections 25%, 21.15. This one not so much so far, probably about 9% or so, but based on the scope of these divergences, my expectation is for an imminent break of that trend line. Imminent being, it's a multi-year trend line, so imminent doesn't mean minutes, hours, or days. It means weeks, probably weeks from here by the end of the year. And then we break that, and Microsoft will come down, I believe, to the 97.50 level at minimum, that is. Couple more. There's Alphabet. I have two different charts. This is one share class GOOG, and I have this trend line. It fits off this low right here in mid 2015, and we're cracking below it now, and or we already cracked below it last week. Printed red candlestick close, and we're also below the 40-week moving average there as well. So that puts Alphabet in a precarious technical posture right now. And here's the other share class, Class A. You can't, this trend line doesn't work on the other GOG, but it has very well-defined trend line, and we're at support now. So I always talk about giving the benefit of the doubt. This is basically, it's the same company, just two different share classes. So what I do is I give the benefit of the doubt. Even though I had it on breakdown on the other one, that doesn't matter. This one needs to go as more eyes might be watching this one. So there's a level to watch. And again, we're dancing precariously on it. We can hold it like we did many times in the past, but eventually all trends come to an end. All rallies come to an end. There are corrections. It's just a natural part of the cycle. And there it is. So we're sitting on these flashpoint type support levels that are either going to hold right now and produce another bounce. Facebook is already below trend on that weekly trend line. Intel, pointed out this wedge way back here, and when we were at the highs, I was calling for a 24 and possibly a 32% drop from up here once that wedge broke. It did break, and we did drop right about 24% so far off the high. So my in percentage gains, my target's been hit, but I still have, and I still think it comes down here. My price target was that support level around 42.59, and that would also mesh with just another leg down in the market, and possibly this other target I have down here at 38.27, give or take. So that's it, and just as I wrap this video up, I'll reverse up on the daily charts of the stocks I just covered because I didn't cover all the daily charts. There's Intel. I talked about this. There's that wedge I pointed out, the big correction there off the highs. Nice drop so far. There it is, about 24%. And that's set up, and I pointed out this bullish falling wedge, but I was suspicious about it, and I kept referring to what I called a failure to launch. It just had a chance. It finally broke out. It was like breakout failed. We back tested, but then it moved up. We started to rally. That's where a breakout should take off, but it didn't. It came back again for another back test. But if you are a bull and you want to get into tech stocks, especially semis, here's a stock back testing with a pretty decent support zone, very decent support zone, a gap right there. That gap defines that support zone, the top of which is 43, bottom's around 41.64. You go long close to that level or and on the back test of this wedge, and that's subjective. You had bullish divergence and everything else. However, if this is the beginning of a much larger correction or possibly a bear market, this is where, and I've talked about it, bullish chart patterns fail. They have a higher failure rate, just as the bearish chart patterns have a higher failure rate in a bear market. So you can look at a glass half empty or glass half full. I show you the charts and the key levels, and hopefully that can help you, whether you agree with my analysis or not, on stepping in and buying where you want to buy. Facebook has been holding this support for. Here's another one. If you're bullish, Facebook has a pretty decent support level here. Bullish divergence. You can buy it at support. So far it's held that support, but if that support level breaks, not good. And I already showed you the weekly chart where it's broken down. Here's Alpha GOGL. There's a nice bear flag, it looks like. So we've had some shaky action. This one's been walking its way down. Here's a stock that topped back in July, one of the market leading FAANG stocks, and you can see it's been zigzagging its way down. This is a downtrend. A downtrend is simply defined as prices making a series of lower lows and lower highs, and that's that's what Alphabet's been doing. And so if you take this most recent leg down, forget about everything else. We're in a downtrend, at least a near term, not a long term, but a near term downtrend, even intermediate term, we could call it. But this is just a beautiful looking bear flag pattern. So again, look for some downside in these FAANG stocks. And here's a target I've had key support zone for a long time, and I think we hit it. I think we will hit it soon, is what I'm saying, and I think that'll play out for that downside scenario. Right when QQQ hits the targets that I showed you, these stocks will all probably also come up on their comparable support levels around the same time. So this one, there it is, 10%. So that meshes almost perfectly with my drop for QQQ. And finally, Microsoft. It's busy chart, but here's a trend. This white trend line really stands out. So it's a trend line support, and then I have an alternative trend line below. And I already covered Amazon, I think, yeah, in the beginning. So there it is, guys. And I wanted one more thing, and then we'll wrap up. I promised here. I just wondered if I didn't measure it out already. I told you there's that pennant. Impulsive move down. Let's just see from where we're at today. And if I can grab that candle without grabbing how much to my T2 zone, about T2 zone, the top of that target, second target zone comes in. There it is, about 10.43%, almost 11. And that's about exactly what I have on QQQ. So that all comes together, and that's what I wanted to let you know factors into my analysis. I look at the top 5 or 6 or so stocks in QQQ because it makes up the bulk of the returns. And if the analysis aligns, and I can tell you, what can't promise you we're going to have that slide this week or next, that another sharp leg down. But if we do, I can tell you with the highest degree of confidence that that would be my target, about 10 or 11% from where we are now, as well as all these stocks. And you'll see them hit at the same time. And if that plays out, I will be reversing my trades. I will be covering my shorts at the same time, going long for bounces that I would expect to last several weeks and measure into the double digits percentage-wise. All right, we'll wrap it up here. And if anything changes, I'll let you know. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.